I commented on the topic of apartments in a recent chat that ended up going viral, but I feel the main message wasn't clear to everyone. I want to explain to you in a very simple way and with more details why, in my opinion, buying an apartment with the idea of building long-term wealth is often one of the worst financial decisions one can make, both here in Brazil and in any major metropolis around the globe. If your idea is to invest in real estate to get a financial return in the future, this video will show you the step-by-step to protect your assets from the hidden costs of maintenance and building aging and still give you better alternative for passive income with less hassle. I know what you're thinking, but I've always heard that real estate is the safest investment in the world. This is the most common objection, and you're right to suspect that not all that glitters is gold. What many people don't see is that the quick profit you get from selling an off-plan apartment is one thing, but the security the market promises when holding onto that property is another long-term trap. The fixed condo fee rises at double the rate of inflation, silently eroding your wealth right after handover. Having worked with high net worth individuals and seen firsthand how old apartments become a liability, I have a practical market view that proves the appreciation of a house versus an apartment is very different. The timing couldn't be better, because in a moment of global economic uncertainty, ensuring your investment generates income efficiently and is protected is more urgent than ever. I'm not just talking to those who buy to rent. Even for those thinking of living in the property, there are important points to consider. Before I show you the numbers, tell me, have you ever owned an apartment that turned into a financial headache because of a condo fee that wouldn't stop rising? Leave your experience here in the comments. Is real estate really the safest investment in the world, or is that a myth? Remember folks, if you like our project, besides your opinion, leave a like now so you don't forget. It helps this project immensely to keep bringing these videos to you. Thank you. Let's get to the fact. In the short term, of course, you can make money. If you buy an off-plan apartment today and manage to sell it in 3 or 4 years, it's very likely you'll make a profit. But if your goal is to build solid wealth, something that lasts for decades, the situation changes completely. To show you this, let's talk about problems and then solutions. We want to give you alternatives to get the income that rent can generate or to grow your money more safely. The first thing you need to understand is the fixed expense called the condo fee or HOA fee. When the building is newly delivered, it's cheap. It's a low cost. As the building is new, you only need to pay for cleaning and the doorman staff. There's almost no maintenance, but time passes. Looking at the evolution of costs in São Paulo, for example, we see that condo expenses increase much faster than inflation. There were 16% increases in fees in just a few months of 2023, while inflation was below 4% in previous years. In prime areas, it's common for just the condo fee of a 60 square meter apartment to cost more than our $600 per month. In Rio de Janeiro, the scenario is similar. The cost of the condo fee per square meter almost doubled between 2013 and 2024. This is a direct result of the building's natural aging and sometimes an increase in security costs. This rise is global. In cities like New York or Paris, old buildings need very expensive facade repairs or plumbing replacements, and these costs are passed on to the owners through shocking special assessment fees. The logic is that the older a building gets, the worse the cost becomes. That's why in traditional old neighborhoods like Leblon, the monthly condo fee for a small apartment can easily approach R10. Old buildings require more and more maintenance, and here's a tip for those who rent. If you are a tenant, the law says you are not obligated to pay for construction or improvement works on the building. The money you pay into a reserve fund for the condo, for example, can be deducted from your rent, as the responsibility for the building structure belongs to the person renting to you, the owner, but back to those who buy to invest. All these very expensive renovations will come out of your pocket. In places like Belo Horizonte and Brasilia, condo fees also consistently rise far above inflation. We're talking about fixed expenses that grow at almost double the rate of inflation. This makes the apartment a unique investment, but in a bad way. It's the only investment where your fixed cost increases faster than the income it gives you. If the rental apartment stays vacant for 2 or 3 months, all the profit you would have made from rent is devoured by these fixed costs that never stop rising. Now, if apartments are a bad deal in the long run, why are they so popular? The simple answer is a house ages much better. A 45-year-old house with a few reforms to the pipes and wiring becomes practically new. You have the freedom to knock down walls and change everything. In an apartment, you can't make major structural renovations because you don't fully own the structure. Any reform of that level needs to be done jointly with the entire building. The real appreciation is in the land. And when you buy a house, you own 100% of that land. In a building, the land's value is divided among 50, 100 or more units. Understand the game. Developers and the government love apartments. Why? While you pay a high price, the IPTU, urban building and land tax, becomes the city's biggest source of money, and apartments are the favorite target. Imagine that on a lot where there was once a house paying one tax, the developer puts up a building and the government starts receiving the tax from 90 apartments in that same space. It's an absurd increase in revenue for the city. In Sao Paulo, the municipal tax rose from 10% of total revenue to 32% in decades thanks to verticalization. The more people in a building, the more tax the city hall receives. This concentration of people in buildings is also encouraged because it lowers infrastructure costs for the government. Think about it. In cities like Shanghai or Tokyo, verticalization allows a single street to serve thousands of people, saving much more on water, sewage, and electricity than if all those people lived in spread out houses. Therefore, developers often receive public incentives to build vertically. The ones who pay the bill in the end, hoping for a financial security that doesn't exist in the long run, are the owners. In Manhattan, New York, the situation with old buildings is a classic example. Their maintenance costs are called assessments, special assessments. When a 60 or 70-year-old building needs to replace the entire heating system or make a major structural repair, the Residents' Assembly approves a single gigantic fee. For example, a resident might receive an extra bill for $0 to pay all at once. This is common and has nothing to do with the normal monthly condo fee. If you're an owner and don't have that money in reserve, it's a serious problem. The value of your apartment, which you thought was a good investment, drops instantly because the buyer knows they will have to bear this expense soon. In many European cities like Rome or Paris, the story is even more restrictive. Many buildings are considered historical heritage, which means the government imposes strict rules for any type of renovation. You can't just renovate the facade or change the windows even if the building is falling apart. The bureaucracy, time, and cost to get approval for work are extremely high. This difficulty in modernization makes life in apartments expensive and real appreciation limited because the property can't keep up with current technologies like thermal insulation, for example, which leads to more spending on heating or air conditioning. Hong Kong is one of the most expensive and verticalized real estate markets in the world. There, the aging of buildings is a huge concern. When old buildings in the city center, 50 to 60 years old, become unsustainable, often the only solution is for the government to expropriate and demolish them, offering compensation to the owners. The problem is that the compensation paid is not always enough to buy a new property in the same area, forcing families to move to more distant neighborhoods. In other words, the guarantee that your old property will be a secure retirement disappears when the city decides it's no longer useful. In a short period, 10 to 15 years, I agree that new apartments appreciate and generate money. If you buy off-plan, the minimum appreciation is 30%, and in a year you might even double the sale value. But think about the very long term. Is someone who bought an apartment 30 years ago still comfortable with the income? I deal with high net worth individuals, and old apartments are always the biggest headache. They lose real value over time. The underlying problem is that buildings and cities get old. More than half of the buildings in Sao Paulo were built before 1974. Millions of people live in constructions that are 50 years or older. Old plumbing, outdated elevators, wiring not up to current standards, and a tired structure with very expensive maintenance. In Sao Paulo, the case of a building that collapsed in 2018 is a clear example of this risk. When wealthier families move out of the old city center because there's nowhere left to build new modern buildings, the original neighborhoods lose public incentive. Developers look for new areas, and the city's money follows the construction of new buildings, leaving the old area to degrade. Think of the downtown area of any Brazilian capital. There are attempts to improve, but it's an effort that has never been fully successful in many cities. Rio de Janeiro is an exception because of the beach, but even so, the price of old apartments has lost a lot of value compared to their peak. Another problem is the mandatory works that never end. Older buildings require inspections every 3 to 5 years. Any report will point out problems: facade, elevators, infiltration, fire prevention, and the cost to fix everything is charged as an extra condo fee. It's normal for the condo fee to rise 20% to 30% in a single year because of these reforms. If the condo doesn't have a large cash reserve, the owners have to pay for everything at once, generating huge installments. I myself lived in an old apartment from the 80s where the condo fee went from R1200 to over R20 for a considerable time. When we compare, houses appreciate more than apartments. The appreciation indicator for new apartments is between 4% and 5%, while houses and land appreciate between 6% and 8% per year. The annual costs of a house are much lower, and works are sporadic. If necessary, you can simply tear down and rebuild the house because the land is what has the main value and it's all yours. In apartments, the land value is divided into multiple units, diluting your gain. Therefore, in general, buying land for investment makes more sense, as urban land can appreciate between 15% and 18%, while apartments rise between 10% and 14%. With this, we can conclude, it's not that it's impossible to make money with an apartment, but you need to have the right strategy. The best way is short-term speculation. You buy the apartment off-plan, take advantage of the peak appreciation in the first 10 years, and sell before the building starts to have problems. It's an interesting model: buy off-plan and sell as soon as it's ready. Perfect. If you buy to live in, do the same thing. Live there for a while and trade it in before the apartment gets old, exactly like we do with a car. If you're looking for stability to live in the same place forever, it's better to look for a gated community or a house. If security is a problem in your city and you need to live in an apartment, do so knowing that you will need to move to a newer one before yours gets old. For those looking to focus only on generating income, they are much smoother paths. Important. Remember that what I'm saying here is not an investment recommendation for you. It's just my view on how I personally would invest. You can invest in real estate funds, fundos imobiliarios in Brazil, or their global equivalents like REITs, real estate investment trusts, popular in the United States and other countries. REITs are companies that own and manage income-generating properties like offices, malls, and hospitals. They are required to distribute most of their profits to shareholders, which makes them a way to receive rental income without the headache of owning an old building, as the management is professional and the portfolio is diversified. Another option is to use fixed income by buying government bonds. In Brazil, we have the Tesouro IPCA. In countries like the United States, you can buy Treasury inflation-protected securities, TIPS. These American bonds are very similar to our Tesouro IPCA Plus, as they protect your money against inflation. For example, if you decide not to buy the apartment and have the equivalent of $400, you can invest that amount in TIPS. The bond's principal value is corrected for inflation and it still pays interest. This gives you a monthly income similar to rent, but with the guarantee that your purchasing power doesn't decrease, unlike what happens with an old apartment. You can also build a good portfolio of dividend-paying stocks. Or if you're looking for appreciation, you can invest in stocks or fixed income bonds with attractive rates. Again, this is just my view and not a recommendation. Overall, for those seeking long-term money who don't want to worry, apartments are bad. For those seeking rapid capital multiplication, they are interesting, but with more risk. Are you looking for peace and profitability or a quick buck? It all depends on your focus. An important point is a common question about the destination of tax money. It's true that the government collects a lot, in the range of 3 trillion reais, and you'll see that a large part of the budget is to pay the public debt. The detail is that the government doesn't use the money it collects to pay the debt. What happens is the rolling over of the debt, it borrows money again, issues new bonds to pay the old debts. In practice, the payment is postponed forever, and that's why the government continues to seek to increase tax collection. Understanding these maneuvers requires study. After seeing all these proof and alternatives from REITs to tips, I want to know your final opinion. For you, in the long run, which real estate investment brings more peace, buying land or facing the infinite expense of an apartment? Comment here with your vote and tell me what your next strategy is. This video doesn't end now. It continues with us talking in the comments. If you find this video interesting, I invite you to become a channel member and like this video. Up here on the right side, I'll leave a video recommendation for you to continue with me.
El gossip que